Hello everyone, in this video, we'll be exploring the ancient Phoenician civilization and their contributions to the world of banking and commerce. The Phoenicians were one of the earliest and most influential civilizations in the Mediterranean region, with their influence spanning from around 1500 BCE to 300 BCE. They were a maritime people, renowned for their trading prowess, shipbuilding skills, and extensive networks of commerce. Banking in ancient Phoenicia. One of the key features of the Phoenician civilization was their sophisticated system of banking. They were the first to develop a system of letters of credit, which allowed merchants to conduct business across long distances without the need for physical currency. These letters of credit were essentially IOUs that could be redeemed at a later date, and they helped to facilitate trade and commerce throughout the Mediterranean region. The Phoenicians also developed the concept of interest, which allowed them to profit from their lending activities. They would lend money to individuals or businesses and charge interest on the loan, which was a percentage of the total amount borrowed. This system of interest helped to incentivize lending and encouraged economic growth. Trade and commerce in ancient Phoenicia. The Phoenicians were also renowned for their trading activities, which spanned across the Mediterranean and beyond. They established trading posts and colonies throughout the region, including in modern-day Tunisia, Spain, and Italy. Their trade routes were extensive, and they traded in a wide range of goods, including metals, textiles, and spices. One of the most important trading products of the Phoenicians was their purple dye, which was made from the murex snail. This dye was highly valued in the ancient world and was used to color the garments of royalty and other elites. The production and trade of purple dye helped to establish the Phoenicians as major players in the world of commerce. Modern central banks and their history. Fast forward to the present day, and the concept of banking has evolved significantly. One of the most significant developments in the history of banking was the creation of modern central banks, which began to emerge in the 17th and 18th centuries. The first modern central bank was the Bank of Sweden, which was established in 1668. The purpose of central banks is to regulate the money supply, control inflation, and maintain financial stability within a country or region. They achieve this through a range of mechanisms, including setting interest rates, regulating the banking industry, and conducting monetary policy. Comparing ancient Phoenicia to modern central banks. So, how do the banking practices of ancient Phoenicia compare to modern central banks? On the surface, there may not seem to be many similarities. However, upon closer examination, we can see that both systems have the same underlying goal: to facilitate economic growth and stability. Just as the Phoenicians used letters of credit and interest to encourage lending and economic activity, modern central banks use a range of tools and mechanisms to regulate the flow of money and encourage economic growth. Both systems also rely on trust and confidence in the banking system, as well as the stability of the broader economy. In conclusion, the banking and commercial practices of ancient Phoenicia were incredibly advanced for their time and had a significant impact on the world of commerce. Their system of banking and trade paved the way for modern banking practices, including the creation of central banks. Although the tools and mechanisms used by modern central banks may be different, the underlying goal of promoting economic growth and stability remains the same. By studying the history of banking and commerce, we can gain a better understanding of how these systems have evolved over time and how they continue to shape our world today. Thank you for watching.